Hello folks, everyone is talking about oil and gold, but in this video I want to talk about the one neglected commodity which I like even more, copper. I firmly believe we're in the midst of a commodities supercycle and that copper will be one of the key beneficiaries. This supercycle is underpinned by several factors: lack of investment in copper supply, global spending on transitioning to a green economy or green capex, onshoring of manufacturing back to America which will require spending on infrastructure, and rising military spend. If we want to reduce emissions by increasing renewable energy sources, we need copper. This diagram from the Visual Capitalist shows that copper is a key ingredient in all renewable energy sources. Research from Goldman Sachs suggests that there is likely to be a supply shortfall in copper beginning this year. Due to recent setbacks in copper supply, I think this supply shortfall has actually been brought forward. These recent copper supply setbacks include a production cut at Anglo American, which is a large copper producer, as well as the closure of the Cobre Panama mine owned by First Quantum Minerals, which was equivalent to taking out 1% of the global supply. This chart from Goering and Rosenzweig shows that the last two times copper inventories were this low, the price of copper went up 2.5 times. Finally, due to rising geopolitical tensions over the past few years, militaries around the world are ramping up spending. There is actually talk of a new arms race between the West and China, Russia and Iran. Traditionally, the main raw materials required in the military are steel and crude oil, but since electronic warfare is becoming commonplace, I think the next arms race will use a significant amount of copper. This Bloomberg article reckons additional military spend by the West could top $1 trillion a year for the next 10 years. All of these fundamental factors are bullish for copper demand going forward. The price of copper has gone up more than 15% year to date, but that still leaves a lot of runway, especially if we enter a commodity supercycle where copper goes up by triple digits. Furthermore, all momentum indicators in terms of moving averages are pointing to further upside in the copper price. So not only does the fundamental backdrop look good for copper, but so does the technical side. With that said, let me share my top picks for copper miners. The first is Freeport McMoran. This is the one copper stock that every investor knows, and for good reason. It's one of the largest copper miners listed on the NYSE and has several world-class assets. Its biggest asset is the Grasberg mine in Indonesia. Recently, production has increased and it also produces a sizable amount of gold as a byproduct. I actually like copper miners to have gold as a byproduct because it adds a nice bit of side income for the miner, especially since gold is rallying so hard at the moment. Anyway, in this slide you can see that both copper and gold production has been increasing steadily over the past few years. In the next slide you can see that Freeport has ample leverage to the price of copper. For example, if we assume that the price of copper averages $4.50 per pound this year, which I think is easily possible, then Freeport will make free operating cash flows of around $9 billion this year alone. What's interesting is that it's forecasting only $5.8 billion at $3.75 per pound. So the market could potentially be underpricing Freeport, but it should be noted, however, that it has gone up more than 20% year to date. Regardless, I still think Freeport is trading on attractive valuations, simply because I think the price of copper will continue to rise. My second copper mining stock is Southern Copper. Southern Copper owns a host of large copper mines in the US, Mexico, Peru, and Chile. It has one of the highest dividends among copper miners and the highest return on equity at well over 30%. What's interesting about this company is that nearly 90% of the company is owned by a Mexican company called Grupo Mexico, and the rest comprises the public float. That means remaining investors have access to less than 90 million shares. That's a pretty small float for a company whose market cap is around $90 billion. Since the share price has run up so hard recently and is currently trading at a PE of more than 35, I'm waiting for a pullback to buy the stock. This may or may not come, but I have bought other copper miners such as my next pick, which are trading at much more attractive valuations. One of these is Teck Resources. Teck is a Canadian diversified miner who also mines metallurgical coal. However, they are currently in the process of selling this part of the business entirely, and when complete, Teck should receive around $10 billion in cash, which is quite a significant windfall. Besides copper, they are also a substantial producer of zinc, which is a key base metal required for the energy transition currently underway. When it comes to copper, Teck recently opened a large new mine in northern Chile called Quebrada Blanca, or QB, which it partly owns alongside Sumitomo and the Chilean government. Importantly, the opening of QB has doubled Teck's copper production, as you can see in this table. So essentially, Teck has just boosted its copper production at the start of a rally in the copper price, and it's going to get a huge cash windfall should its divestment of the met coal business proceed. This means its liquidity position will significantly improve, as well as the top and bottom lines if we assume that the price of copper continues to rise. I own Teck and I actually want to buy more. Let's say that there's a setback that causes the price to fall. For example, the divestment of the met coal business gets blocked by regulators. I would still buy more Teck because met coal is a crucial part of the energy transition anyway. Steel is required to build green energy infrastructure, and met coal is a key ingredient in the making of steel. Moving on, if you're looking for a small to mid-cap copper miner, Hudbay Minerals might be your ticket. It's currently trading at a market cap of around $3 billion and has several gold copper mines in Canada and Peru. It's primarily a copper producer, but it also is a significant producer of gold. Most of its copper is produced at its mines in Peru, which have recently boosted output due to higher grades. Furthermore, its cash costs in Peru have declined significantly over the past year, as we can see in this chart. Hudbay also recently acquired the Copper Mountain deposit in British Columbia, which is a 21-year mine life and is expected to significantly boost the company's overall copper output in the coming years. Already the boost in output is making a significant difference, as you can see in this chart. One of the downsides to Hudbay is that it carries a fair amount of debt relative to its market cap, more than $1 billion in fact. This is what I think has caused the share price to stay subdued until this year, when the copper price started to rise. In the latest quarter, Hudbay was able to repay nearly $100 million in debt, so if the price of copper keeps rising at the current rate, the total debt could be slashed significantly by the end of the year. Another thing to mention is that the deposit in Arizona, called Copper World, is a great asset, but it looks like it might run into some environmental and community opposition in the near future, so the market might not be putting a lot of value on this part of the business. If this project were to go ahead, Hudbay may get a significant valuation boost. In terms of the share price, it's gone up around 50% this year already, and it's trading on a PE ratio of around 46, so I'm waiting for a pullback to buy this one. Now the final copper stock I want to talk about is Zijin Mining. Not only is Zijin a top 4 copper producer globally, it is a top 10 gold producer. Now this is a Chinese company that derives more of its revenue from gold than copper, but I bought this company because it has some world-class copper assets not only in China but in the Democratic Republic of Congo, or DRC, and Serbia. Besides copper and gold, the company also mines zinc, silver, lead, and has a lithium deposit. In addition, all 3 of their main copper operations in Serbia, the DRC, and Tibet are set to increase copper production this year. Furthermore, they have a world-class mine in Porgera, Papua New Guinea, that just reopened in December, and that should boost their gold output from this quarter onwards. I'm not looking for high dividend yield stocks because I'd rather take capital appreciation, and Zijin fits the bill quite nicely with a net profit payout ratio of only 33% in 2023, which is lower than many other mining companies. So those are my best copper picks at the moment. In summary, copper is a critical mineral which is currently undergoing a demand spike alongside a supply shortfall. This means it's likely to keep going up in price going forward. If you haven't already, please click the like and subscribe button and let me know if you own any copper stocks. Thanks for watching and see you next time.